Welcome to the live stream with me, John, Senior Market Analyst at 𝖢𝖥𝖣yi. Hope everybody's doing well. Hope everyone's having a great Thursday. Nearly at the end of the week, so we're nearly there, guys. We're nearly at Friday. We're nearly there. The week of high impact data is nearly over. I actually need to look at next week, see what's going on. There's still a lot of data next week, but in terms of market shaking stuff, we've had an interesting trading week. We've had presidential elections. We've had 2 interest rate decisions so far. We've got another one coming up this evening as well from the US Federal Reserve. And then we've got some employment data out of Canada tomorrow. So very interesting trading week so far. I'm here to help you kind of digest what has happened. I'm here to kind of show you what markets could be moving from my opinion, some ideas that I have surrounding the markets as well. So welcome. Let me know if you're watching and where you're watching from. Make sure you hit that like and subscribe if you are new as well. Vincent, good afternoon to you. I hope you are doing really well. I am doing very well. Thank you. Good day, John from Ratish. Welcome, Ratish. Hope Ratish is doing good. Hope you're doing well, mate. Very interesting topic to discuss today when it comes to the US presidential election. I've done a lot of videos on this recently. People are probably at the point where they've had enough of the US presidential election, but I think it's important to cover, and we'll only spend 10 minutes on it or so, or maybe even 5 minutes on it. We hear all the stories now. Are we bored of the election? That is one thing we need to find out from chat as well. CG, welcome to you as well. Vincent is watching live from Ghana. I love that we're international. I love that. I love that we're international. So let's get straight into it. I'm not going to keep you for too long today. I want to give you the information, and I want to get you back to what you like doing, which is exploring those financial markets. So we're going to kick it off with the data that we had. I'm just going to zoom in a little bit more into this area as well, so you can actually see what we're doing. Give me 1 second. I actually need to click on the page over here first, and then if I zoom right in, hopefully. There we go. So very interesting trading day so far, or trading week so far. We had the RBA cash rate statement. RBA held interest rates at 4.35%. We kind of discussed this a little bit on Tuesday stream, sorry. We then had ISM services PMI out of the US. Pretty good numbers there, 56 versus the previous 54.9. But the big day was the presidential election. The markets were very slow until we had the presidential election. And obviously on Tuesday, we discussed a little bit about what we would expect in different types of scenarios. If I actually bring up the gold chart, I think I've got our analysis still on here. Here we go, right? So what we discussed on that Tuesday was that if Trump was to win, we would see the US dollar strengthen, bond yields go up. We would see the Mexican peso fall because of the tariffs on autos and the tariffs on Mexico in general that Donald Trump will impose on Mexico. US equities, I put perform poorly, but that was because of a trade idea that I had. I wanted to see it perform poorly in the instance, and then I wanted to get long. So I did feel like equities would go higher, but I was looking for a trade idea there. That didn't happen. The market just rallied to the upside. Pro energy. So I liked the idea of looking at energy stocks or energy in general. One of those being nat gas at the minute is a seasonal play anyway. Nat gas is just kind of hovering around at the moment. Copper and iron ore negative. I haven't actually looked at copper, so let's see how copper did yesterday. Okay, well, it was negative on the day, rebounded now. This is what's interesting about the market, right? Look at that fade that we're getting today across a lot of the different assets. Silver and gold as well. The potential was for a little bit of downside across those markets. Let me just click back to gold. We also felt that the Australian dollar could be something that underperforms as well, considering the relationship between China and Australia. So I think the Australian dollar could be poorly impacted by what goes on. And if Harris was to win, well, we don't need to look into that because it didn't happen. If we actually go take a little look at some of the data that came across our screens throughout the evening. Did anybody stay up and watch the election? I know some of you actually said that it was the first election you were going to be trading through. So let me know in the chat if you did trade it in the end. And if you did, what did you do? Because that would have been interesting to see if you managed to catch any of the kind of moves that we were discussing on Tuesday. I stayed well away out of it. I learned my lesson from back in 2016. Wasn't going to get involved again. I was going to wait until something until after the event, which is what I'm doing now. Trump, 295 electoral votes so far, 270 to win. So they've obviously declared that he has won the election. There's still some reporting going on though, by the looks of this. We've got Nevada still at 90% and Arizona still reporting as well at 69%. But yeah, nothing's really going to change too much here. Trump is ahead in the counts so far as well, so it looks like he could win those too. Alaska, very interesting that came through as a Trump state as well, which was quite interesting to see. So let's go and have a little look at some other stuff. What's happened here is basically Trump has the electoral vote. If we go to the Senate, it's a Republican Senate, needed a 50 majority, 52. And what we're waiting on now, essentially, is the US House results. Now, essentially, if all three, well, we know that the president and the Senate are Republican. If the House also becomes, a majority Republican at the 218 majority, then that's going to be very interesting, because for me, that would add another layer onto Trump winning the presidency. It would add definitely another layer, because essentially he may be able to pass his policies a lot quicker than what he did last time. So that's something to consider, because if we do see that, how much tariffs will he put on? How much tariffs can he put on? What about the deregulation that comes with Trump? How is that going to impact markets going forward? So very interesting to see. Obviously, we don't really need to necessarily worry about this too much until January, because that's when Trump will take his role as president. I think it's the 25th of January when he'll take his role. So although we've got to be slightly concerned about it, the Trump trade does have to be in the back of our heads. We don't necessarily need to worry about it for another month or so. And that's scary to say, because we're in November already. Going on to what else has come up today then. So we did get some employment data out of New Zealand, fairly positive, 4.8%. Although, say fairly positive, it was forecast to be 5, slightly up from 4.6. And the employment change wasn't fantastic. Going through then, what have we had today? Well, we've had the official bank rate from the UK cut interest rates to 4.75%, was largely expected to do so. The bank rates came out as expected as well. So no big shocks there. And in fact, Governor Bailey was talking and was very sort of timid on where rates could go next. There wasn't very much sort of explanation of what he felt could happen in the future. Very much wanted to keep his cards close to his chest, and said the data will dictate whatever happens. What they don't want to do is fall into disinflation. So cuts, again, very similar to what I'm expecting out of the United States. This evening, I think we're going to get cuts again. Unemployment claims are around something similar, but Fed funds rate decision at 5% right now, could be 4.75%. If we head over to the CME Fed Watch tool, let me have a little look at November, which is this coming meeting. We can see that they're expected to see a 25 basis points cut. I mean, there's a 99.2% chance of that. There is a slight chance of a hold, 0.08, which is actually interesting because that's changed slightly. We actually saw this as a 100% chance of easing, and it has changed a little bit going into this meeting. And if we go into December's meeting, if we were to cut 25 basis points and would be in the target range of 450 to 475, how is the market kind of seeing what's going to happen in December? Well, at the moment, they still see further cuts. They still see a 25 basis points cut coming in December as well. I think the December meeting could be an interesting one to see what happens. Will the Fed just cut again before kind of Trump takes over? Because I don't know whether Jerome Powell will necessarily keep his job, essentially going into the new year with Trump in power. So that's the kind of roundup for the week so far. Coming up, we do have obviously, like I said, the Federal Reserve interest rate decision. We do have some data out of Canada as well, and over the weekend we've got CPI data out of China, which is going to be important as well. So very interesting stuff. Let's go take a look at sort of the market reaction then to what happened, because we did kind of touch upon this on Tuesday. Gold prices did fall. We had the market move a lot lower. Starting to see a little bit of a recovery now. Still holding above this daily 50 moving average. You know, for me, I like this upward trend that has been forming within the markets. I don't see too much of a top just yet, but you know, I like this demand zone down through towards that $2,600 level. So if I was going to be a buyer of this market, personally, I'd be looking for prices to kind of come back down towards these areas here in order to then look for, you know, continuations to the upside. You could argue that we've got this little head and shoulders play going on right now. If we were looking at this in terms of just technicals on this daily chart, you know, you've got the move higher here, the left shoulder, the head, and the right shoulder. So just for those that maybe new to the stream or maybe new to trading the markets, you want to be looking at or the head and shoulders pattern essentially is a potential trend reversal pattern. Okay, so if I just draw this on properly, you've got your left shoulder, which is the high there. The pullback would create the neckline of that pattern. Then the higher high would be the head, and then the next sort of low that forms would be the sort of neckline again of that pattern. Right shoulder would be the lower high, and then you can see that's breaking. That's usually a sign that the market could potentially roll over. So from that perspective, price has moved lower. Do I still feel that gold prices could move higher? I do, but we've got to be a little bit careful. I'm not involved with this market, and there's a couple of reasons why that is because I've been short silver recently. I think there's a good value in shorting silver, so I don't necessarily want to get involved with trading gold because they correlate and can correlate quite strongly. So just from a technical perspective as well, you can see that we've had this ascending channel being developed and being built, and the market has been in this upward trend. You know, are the conditions beginning to change here from a technical perspective? You know, I feel like there are signs of that. Again, if I want to be long in a market, I want the market to be making higher highs and higher lows, very much like when we had the breakout of the support or resistance level down through here. Market then rebounded, formed higher lows, and continued to sort of push higher. That's what I would like to see again. If I'm going to be long gold, I need to see some kind of bullish pattern turn out. What if price came into this level here and produced a inverse head and shoulders, which is just the opposite of a head and shoulders pattern? That to me would be something I'd be interested in the market. So gold prices at the moment having a little rebound. A lot of the markets are rebounding what happened yesterday. We'll see if that can continue or not. Going over to the stock market then. So I was hopeful that we would, or what I was looking for in particular was that the market would break lower so that we could get long. And that didn't happen. Now, the reason why I quite like the idea of being bullish equities at the moment, if Trump was winning, because he reduces taxes, deregulates a lot of markets, that is positive for business. And this is exactly what happened back in 2016. I was just looking for a little bit more volatility to kind of drag prices a little bit lower. So if we look at November of 2016, when the election was, that's 2015, was probably this candle here when it was announced. You had this kind of aggressive move down first, right? And that was kind of what I was looking for. I was looking for this aggressive move down to buy the bounce, essentially. And we didn't get that, but look at the run after that. So this to me is bullish stock markets for now. We also can't take our eye off the data though. And the jobs data and the job situation in the US isn't great. So we do have to keep one eye on that. But other data seems to be okay. If I was just to go to here, let's just go to tradingeconomics.com, and we'll go down to this little table here. You can see United States GDP growth 2.8%. That has reduced down from 3%, but the interest rate is still high. It's coming in a little bit lower. We were expecting a rate cut. Inflation at 2.4%. So within that sort of target, well, not within the target range, it's usually 2% and below, but I think central banks are now thinking anywhere between 2 and 3% is okay. The unemployment rate was the kicker that for a lot of the reasons why we were seeing some heavy cutting initially, and that has come down to 4.1%. So if that starts to rise, and they have forecast it to rise, but if that gets towards 4.6%, then they're going to cut significantly at that point. But for now, everything's all right, okay in the US. We can make similarities to what happened in 2007 with current price action. There's eerily a lot of similarities with what's going on, but will that change my mind on how I do anything right now? No, because the data is still okay. Okay, so yeah, US equities seem to be doing pretty well off of this. The Russell in particular as well did really well out of this. Not all-time highs yet, but there was a fairly decent sort of bullish trading pattern going on there. Market has broken through that bullish trading pattern and is continuing to roar higher. So other markets that did particularly well out of Trump was Tesla. I don't know if anybody in the group looks at the stock markets. Pre-market is meant to be sort of similar to yesterday's close, but we had a significant jump here in Tesla prices. Let me get rid of these. Market rallied higher, and look at that gap. Does that make me want to be a buyer of Tesla stock? No. I mean, I still feel like this is a little bit of a, why have we had this jump? It's essentially because of the relationship that Elon Musk has built with Donald Trump, and the fact that Elon Musk could potentially join Trump's sort of political party or political sort of team. And that is interesting, considering Trump is not necessarily pro renewables, is not necessarily pro electric motor vehicles either. So bit of a skewed relationship there. Obviously, Trump likes the space and SpaceX stuff. You know, he started the Space Force team, didn't he, when he was in power last time, which I think has been kept on by the Biden administration. Not 100% on that. But yeah, nice breakout of this kind of 270 level at the moment. Do I think this is extremely bullish for Tesla? I don't know. I don't know. I don't think so, but we'll have to wait and see. I can see a lot of retail jumping in this to try and get on the back of that. So I don't really want to be following what they do. CG, Tesla's overvalued. Yeah, I'm kind of on a similar front to you as that. You know, if we kind of look at where the price is coming into as well, this was from a technical perspective, this was a sort of resistance zone up towards the kind of 280s, 288, 290, up to 300s. So this may be a level where we do start to see a little bit of a pushback here. And I think if we do start to break significant levels, like maybe yesterday's sort of open, you know, that could be a good opportunity to look at prices moving lower. Another one that did quite well out of this as well was Coinbase. Coinbase is the sort of digital wallet for cryptocurrencies, quite a big one. I think a lot of people that are entry level into cryptocurrencies would have heard of Coinbase. Coinbase also did pretty well because Bitcoin did well, and cryptocurrency in general did very, very well. Let me just go down to Bitcoin here, with the market breaking through significant levels of support and resistance, actually breaking through the previous all-time high. And I think this is one of the markets that was easier to call throughout the election, because deregulation, Trump endorsed Bitcoin. I think he actually said, well, actually, I know he said he wants the USA to become the home of cryptocurrency. That may play very well into. I remember there was that coin called Dogecoin, I think it was. I might have butchered that. Let me see if there was Doge. There we go. Let's have a look at that. That probably did pretty well. Oh my god! Look, there's a meme that comes up. That just sums up the crypto market, doesn't it? That just absolutely sums up the crypto market. But Dogecoin, which I know Elon Musk was behind at one point, that has done pretty well. I've only just thought about looking at this market. But usually when Bitcoin does well, most of the other cryptos do well. So yeah, for me, it's not a particular market that I trade, but it's something interesting to consider. Let's get to the fun stuff then. Any questions about that so far? Actually, I just want to touch on one more, and that would be the Mexican peso. It's suffering at the moment, really suffering at the moment. Although it was suffering, it was down 3% yesterday against the US dollar. Down 3.6%. Starting to see a bit of a recovery here for the Mexican peso, and I like this. That would have been an interesting one to fade. Where's dollar CAD today? I don't mind dollar CAD shorts either. But we're going to get into this in a moment, because this dollar move could fade a little bit, and I'm actually interested in a potential euro dollar long. So I'm going to talk about this in a moment. But dollar CAD is one I'm quite interested in, because if we just go and take a quick look at, let me have a quick look at the COT reports here on CAD. So we were talking about CAD futures a while ago, and we were looking to get long on CAD futures at this level. Which CAD futures is basically just the inverse of US dollar CAD, right? Eddie, I'll just talk about this now. This zone in here is that 139s on US dollar CAD, right? This kind of zone through there. Now, looking at the COT reports right now, and looking at the hedge funds in particular, they are starting to short CAD at very similar levels, not quite the same level as what we saw for that nice reversal pattern, but they're getting close. So I am actively looking at dollar CAD. Again, I need some conditions to be met first. Now, this is a very strong level of resistance. If we go up to the weekly chart, this is that really strong level of resistance just through there. This is the last time we got short at 139s, down through to the 136s. Didn't hold it past 136, but it did go down to the 134.50s in the end. But now we've got this kind of other move, and the reason really was because there was a cut signal on the US dollar towards the end of September to be a buyer of the US dollar, and look at that move there. But yeah, Canada's in a little bit of trouble. I've seen a lot of rumors going around about Canada at the moment that they're in deep trouble at the moment when it comes to sort of inflation and things like that. Bank of Canada been cutting rates aggressively. The employment rate in Canada is not pretty either. So we'll be interested to see how this employment data goes going into tomorrow. But I would be interested to see if this can close bearish on the weekly chart. I think if we get that close bearish on the weekly chart at this resistance level, wouldn't mind starting to look for some ideas to the downside going into next week. 4-hour chart has broken through some lows. We've had that rebound when Trump was announced. But I just think, you know, the smart play would be to fade that move because it's not long lasting. So, you know, that would be the smart move for me. But no technical setup just yet. Now, one technical setup I like to look for is number one. What's the daily stochastic show me? Now, it's showing me that momentum is more to the downside here. So that's something I'm interested in. And if I go to the hourly chart, what I would typically look for now is a crossover of my averages. And we started to get it, but obviously price rallied higher. So I need the market for my strategy setup to kind of trend a little bit lower, maybe get back into this pre-Trump announcement support level, rebound, get my averages to cross, and then if we can get some kind of pattern where price forms a bit of a base at these lows and then we get lower highs, I would look to short the break on that to see if we can get back down to 137.50. That's something that I would be looking to do on the US dollar CAD. Now, if I show you what happened last time, we had the cut signal to short, just to kind of give you an idea of how this worked when I was getting short on dollar CAD. Let me just go back here. So it's this line in here. Let me make that stand out a little bit more because I've realized that is a white line there. Again, look, we rejected. Let me move that out of the way. We came up into 139. We rejected. We closed lower. Okay. So what I was looking to do was wait for my stochastic setup, which was on the 6th of August. So after the 6th of August, basically, I was looking to get short down into the 136 handle as well. I think I actually just shorted that candle, if I remember rightly. I did quite a few trades on dollar CAD to the downside. But if we look at it from a strategy point of view, right? When I got the crossover of the averages, then what I like to look for is pullbacks and consolidations, and then I'll look to try and trade those. So, you know, this one here, for instance, there was that sort of triangle pattern in there. One that I did take was the breakout of this. Okay, it took a while to kind of play out throughout, but we have that familiar pattern I was talking about where we got the price making a base through this area here. But look at the highs. The highs were getting lower. And that to me is a sign of weakness from the buyers, and that sellers are willing to kind of eat the buyers' orders up as price rebounds towards those previous swing highs again. So I entered basically on a breakout of this move here, put my stop losses above the swing high, and I had to wait for a while for this to play out. But the market did start to move lower then. Again, there would have been this consolidation breakout move in here market continued to trade lower towards the 136, and 136 is where I called it quits at that point. So I'd be looking for a very similar setup going over here now. I'll be looking for the market to give me my strategy setup, pull back, consolidate a little bit, break out of that consolidation, and then move to the downside. So dollar CAD I like. I think as well, if we go to sentiment, right, and have a little look at where we are positioned at the moment with regards to US dollar CAD, it was very much weighted to the short side. Let's have a quick flick down. Daily, we'll just go on to positions, and we can see that there's this build up in those short positions through there. Now, usually when we see a large decrease in those, that's when we start to look to buy or sorry, look to sell, because you can see the relationship with price when we do see that. But it was almost like a little bit of a false move, and then I don't know what happened there for the 2 days, but price then continued to, or sorry, the positions continued to kind of move higher. And the reason why that is because retail are usually wrong about price, right? So you can see here, retail are getting long US dollar CAD. What's happening to price? It's moving lower. So they're building these short positions, okay? Look at what's happening to price. It's moving higher and higher and higher. What are they doing now? Well, they're starting to decrease those short positions in the market. So indicative to me that we're starting to head towards a little bit of a market top in dollar CAD. I just need some conditions to be met before we do it. So that's CAD. One market I'm very, very interested in is the euro market. Now, I've been very bearish euro for a while. We talked about it in, I don't know if did we get the chance to talk about it in streams, because it was end of September and I don't think I was streaming at that point. So we might not have got to talk about it too much. I might have mentioned it in passing videos, but I like the idea of potentially being a buyer of the euro. And my reasoning behind that is the data here on the commitment of trader reports. Let me just grab a pen tool so that I can show you what I'm talking about. No worries, Eddie. Hope that analysis was okay for you. But let's have a little look at what I'm going on about. So actually, if I screenshot, I don't know whether this would work because I won't be able to see. No, I'm not going to screenshot it. Right, let's just do this. So what's going on here? What can you see here? Okay, so this is a weekly chart of euro futures. Okay, so euro futures, it's just that when you look at your charts, if you're a retail trader, you're probably looking at euro US dollar. You know, the euro US dollar is the derivative really of euro futures. So you've got the euro US dollar. Now, what's going on up here? So you can see this kind of 100% here. Now, Markets Made Clear and the team at Markets Made Clear do a really good job at putting the commitment of trader report data together. And what they do is, or what Ray does is he shows you when commercials are at aggressive levels, okay? Because that can lead to a reversal within the markets, especially when the hedge funds are doing the opposite. So basically what it's telling us is that so these are the commercial positions here, over a 36-month, 18-month and 6-month period, the contracts are at the highest they've been for that amount of time, okay? So over 36 months, the net contracts are at the highest they've been in that period of time. And, you know, we can prove that because if we look left, this is where we're at. We're actually slightly above these contracts in here on the commercial side. Now, on the hedge fund side, okay, so hedge funds and large speculators, which is what non-coms are, okay, they're heavily short, and now they're speculators, right? They're trying to make money out of the market. This is who we typically want to follow. Okay, you know, when they're getting short, look what happens to price. Price is moving lower, but they get to a level of extreme, and when they reach that extreme, they can often pull out of the market or take profits or switch their position. Whereas the commercials are in the markets not to make money. They're like businesses. They're like basically trying to hedge their sort of international risk within the market. So they're a little bit different. But the hedge funds, when they get super aggressive into a market, it can turn. And they did a very similar thing here in 2022, right back there, where the market kind of pulled into this level here. We started to see that hedge funds were aggressively short, commercials were aggressively long at that point, and then the market turned. Okay, and there's been other instances in the past where it hasn't happened. So again, you gotta always put your technical factors with it. Look at this area here. You know, commercials aggressively long, hedge funds aggressively short. Price still continued to be bearish, right? So it's not a sort of perfect indicator. Nothing is, but I put a lot of weight behind these. And what I'm looking at right now is hedge funds are aggressively short, commercials are aggressively long. What can that mean for price? It can mean a turning point for price. Where is price, right? That's the other important question as well, because if we look at this weekly chart here, are we really at a factor of what I would say is an extreme? Probably not yet. Okay, probably not yet. If we actually just float up to a euro US dollar chart, so I can show you this in a bit more detail. And what I'll do is I'll pop it on a weekly chart so that you can see that it's exactly the same as what we were looking at. I'm just going to delete some of these. You know, if I was looking for an extreme turning point, well, I'd be looking at kind of areas either down here, right? This sort of zone in here, I would say, because that is an area where the market has been or found consolidation and support and then rallied in the past. This was the 2022 area which rallied. So we're coming into those areas. The only area we've kind of come into right now is kind of that low from that kind of spike higher. Market's kind of finding support around the 0.776s or, you know, just below 0.8s. And we've also seen price kind of try to push the 0.68s as well and kind of fail. So again, I'm just kind of watching euro at the moment because I feel like there's a very strong commitment to trader report idea there, and that's something I want to try and potentially gain an advantage from. To kind of back this up a little bit, I did some research on seasonals as well. And I was looking at what usually happens for euro going into November. And initially it can be bearish, but towards the end or around the 22nd of November, we can often see a bottom form and a bullish period between sort of November to the end of December, really. So the only interesting thing about this right now is that, you know, it over 25 years of data, we've only got a 49% correlation with the price. Now it does say here election 90% correlation. So let's have a look at the election, because I haven't actually done that yet. It might actually go against my analysis. So let's have a little look at what happens to euro dollar in an election year. Oh, well, that's interesting. So I actually forgot to look at that. Election 90% correlation with the current year's price. Okay, and look what typically happens in an election year for euro, right? Potential reversal going into the end of November. So what we've got really, and this is the method that I like to use. I like to use the WCS method. That method is my method. It's coined by me. You know, you won't see that anywhere else because I made it up. So the WCS method. So you got Y the conditions around that market, and then you've got strategy, which is what I was kind of talking to you about earlier with US dollar CAD, right? So why, you know, what's my reasoning to be in this market? Well, we've got a COT signal long, okay? We've got a seasonal long at the end of November. Okay, that makes a lot of sense. So that's my why I want to be involved with a particular market. Looking at the conditions of the market, do we have signs of a bullish reversal? Okay, and now the way I kind of ask these questions to myself is because, you know, I want to be involved with, you know, that bullish reversal there. So looking at the weekly chart right now, are we coming into support levels? Yes. Okay. The stochastic is still hovering a bit more bearish. If I go to the daily chart here, we've actually got a bit of, I guess, divergence between what price is doing and what the stochastic indicator is doing, largely because of the data that we had and obviously Trump's election victory. But usually what I would like to see is the stochastic starting to push up a little bit. So we might get a kind of opportunity when price starts to do that, right? Or the stochastic starts to do that. Ultimately, what do I want to see here? I want to see something that's like this, or I want to see something where we get a strong push away, very shallow candles or very shallow pullback throughout, you know, a period of days before looking for a move again. So first idea is we're at these support levels, price consolidates, breakout, move higher, you know, could target up at the 1.09s. Second idea is, you know, what happens if we recover this move, right? And then price stalls here for a few days. I think that's fairly bullish. So I would be looking at kind of breakouts at that point as well, with the opportunity to try and get up towards 1.1s, maybe even back up to the 1.11s within the market. Okay. Now, there are always two sides to this, because you're not trading the futures directly unless you've got opportunities to do that yourselves. But if you're trading through Blueberry, you're trading the CFD, so you're trading euro, US dollar. So euro, you know, I like the idea of being bullish from the commitment of trader report side of things, but from a fundamental side, it's still slightly negative. Now, what would be interesting is if we start to get negative euro data, but positive reactions on price. Now, that to me is another sign that sentiment is going to change. Let's say, what data have we got coming up out of the euro in the near future? Not bothered. Oh, I'm not bothered about President Lagarde speaking, but President Lagarde is speaking. Doesn't look like we've got much going into the end. So maybe towards November 22nd, which would be ironic, considering that is the sort of date that the seasonal was suggesting that we see a euro long. Let's say we get this one here, German flash manufacturing PMI. Okay, now we know this has been aggressively down, and I can show you that. Let's go to German manufacturing PMI and let's open it up in a chart. I might just zoom out a little bit here. Okay, so this has been the German manufacturing since the September 2022, right? It's been bearish. It started to peak up a little bit, but has then continued to be bearish. What have the ECB done to combat this? They've tried to cut interest rates to support the German economy because it's not doing very well. German economy is the #1 economy within the Eurozone, okay? France is second, and then so on and so forth. So very interesting to see that, you know, we're well below 50. We're, you know, previous month we were well below the 42 level, which seemed to be a bit of a strong point for German manufacturing PMI. But what will be interesting, right, is if we see this negative outcome or see a negative outcome here, but euro prices rally. That would be a big change in sentiment for me, and that is what I'd be looking at, because you wouldn't necessarily put those two together. You would be looking at sort of German flash manufacturing PMIs being negative, euro being negative, because of that, because that's what we've seen as the reaction recently. So that is also something to take into consideration going forward. How does the data impact the price? You know, does the US dollar data, which should be supportive, does that turn a little bit bearish? Do we start seeing selling because of that? Also something to consider. So yeah, I like the euro US dollar options. There were some options that we kind of spoke about last week or at the beginning of the week, which I really liked as well. One of those was, it might have been last week actually, we talked a little bit about platinum futures. So platinum also was an idea to be short. And you can see that we started to play that out a little bit here. Again, why was I interested in this? Well, if we look at the contracts on the net side of things, hedge funds are bullish, the most they've ever been since 2021, right? Which was these highs in here. Commercials are short at levels they haven't been really since 2021 either, which was this move in here. So I'm happy to look for platinum ideas. I did manage to take a little bit of a move in the end. Let's go to the futures chart first. But this is where we're at right now. Okay, so I liked the idea of looking at shorts sort of around these highs, because that's what I'd look for, areas of resistance. So I'm starting to lose my voice a little bit. So areas of kind of resistance would be interesting to me. So again, just apply your technicals at this point. But I think it's so important to have a reason why you want to be in a market first before you go and trade it, just because you might be able to avoid getting into certain positions. No offense to other brokers out there, but I have seen some calls for longs on platinum. Now, they weren't obviously looking for mad targets on this, but I think if people took their words for wisdom, they could have been burnt a little bit, because also the commitment to trader reports can help you prevent, you know, getting into moves that aren't necessarily there. A lot of the talk was the fact that platinum was scarce, but you know, when you do research on platinum, what is it really used for? It's used for jewelry. Well, are we in an environment where people are buying jewelry at the moment? Not really. Also, what is it used for? Catalytic converters. Well, the market's moving more towards EVs, so do we really need catalytic converters? Although, you know, in the UK, there's a big problem with people robbing them from cars, so they're needed somewhere, but just not necessarily in countries that are really heading for the net neutral, I guess. So yeah, what happened was price fell. That was in line with what I was expecting. The commitment to trader reports. We're getting a little bit of a consolidation here now, which again is good, you know, because if price consolidates at this trend line support and then we break lower again, then I think price will start to head a lot lower, maybe towards the $900 level, maybe even the 950s. But again, technicals have to line up for me now. Ideally, what would I really love? A move back higher, because I just think that would be great from a reward to risk perspective. That would be something I would also be very, very interested in happening. But at the moment, daily chart hovering around, I'm not, you know, bothered by that right now. You know, can we get back up towards the 1011? I would love that. Again, that's a nice little area to look for a potential short position. You know, looking at the hourly chart, we've got the crossover of the moving average, the 50 and the 200. Market consolidated here. You know, that would have been a potentially nice move to have a little look at as a short initially. Again, price starts coming back. What did it do? Consolidated, broke out of the consolidation. That would have been a nice area to be short in the market. But that was all through the election. What have we got now? Well, price is starting to move higher. Fantastic. That's what I want to see. consolidate somewhere, break lower, and that to me would be very, very ideal in that sense. Very similar to silver as well. I liked silver short. That market has been moving lower. Just need to wait for some kind of technical setup here again before getting back involved with anything on silver. So yeah, I think at the moment it's interesting. Again as well, look, a little bit of trend line support coming in there. That would be nice if that could potentially break to the downside. I'd like that a lot. But the COT reports showed us to potentially get long this year, and it showed us to get long around $22, and look what price has done. So yeah, looking to see if there's a good reversal coming up. Any questions, guys? I know there's a lot of information to take in there, but to kind of summarize what we've discussed today, we've discussed what's coming up in terms of data. We've discussed the US presidential elections, how that impacted markets, what's coming up for the federal funds rate decision later, market pricing in the chance of a rate cut, 97.2%. Chance of a rate cut there. So pricing that in. That has changed again, hasn't it? Pretty sure earlier that said 0.28 on no change, and that was not okay. So that's changed again. But market is definitely weighting more towards a cut. We discussed what happened with Trump and the potential for a red sweep essentially, and then from there we've talked about US dollar CAD, and we've talked around sort of a euro idea and a platinum idea. Okay, so I'm going to leave it there. I hope you enjoyed the analysis today, and I will leave you with the euro US dollar price, just so we can refer back to it at a later date. So any questions, guys, please let me know before I end the stream as well. If a good way to think about this is if there's a potential euro opportunity, okay, you don't necessarily need to buy euro US dollars. Okay, one thing that I really love to do is use currency strength and weakness. And what I would look at are currencies that are underperforming. So at the moment, that is Aussie, New Zealand, and yen. So you could go to like Euro Oz, Euro Kiwi, Euro Yen. For instance, if we have a little look at Euro Aussie, the market has plunged quite a bit here, but there could be an opportunity there. The Australian dollar's finding a bit of support at the moment. So obviously the China-Trump trade there is recovering a lot. RBA are not necessarily cutting interest rates either, so we'll have to see if that changes on the scoring at the moment. But Euro-Yen might be an interesting market to have a little look at, especially if the Bank of Japan don't act. That could be concerning. Let's see, Euro-Pound. I liked Euro-Pound short, so nothing's really changed for me there. Trying to think of weak currencies right now. CAD, I guess, is a weaker currency at the minute. We're at these range lows, I guess. So yeah, we'll figure out what's kind of weaker next week, and then we'll see if there's any opportunities there. All right then, guys. Thank you for joining me. CG, thanks for the analysis. Nice work. You're welcome. I'm very well. Just nothing. Sorry, just nothing. You've come to the stream and I'm about to leave, but I hope you're well, and yeah, hope you have a great rest of your trading week. Have a great weekend, and I will catch you in a live stream on Tuesday. Thanks for your support. If you are new around here, hit that like button, subscribe for more videos. We do daily videos here at Blueberry, so you'll be seeing lots of content from me, and I will catch you very, very soon. Enjoy your weekend, guys. Thank you.